Good afternoon, everybody. I have the Gold Miners Bull 3X Bull NUGT called Nugget. And when we were buying it back over here, that was on 8/19, we were at $32. We made an all-time high up here at 44.75. And then we pulled back in the last 6 days and we've set up a lower consolidation. So the indicators that we're looking at, the TrendSpotter is a buy that we have, and our 7-day average directional indicator is a buy. The 8 to 10-day moving averages have a buy, and the 20-day moving average versus price is a buy as far as that goes. And the 20 to 50-day MACD oscillator has a buy, and the 40-day commodity channel index has a buy on it. As far as the opinions go, now we're going to get down into the strength of the pullback has weakened some. The 7-day average directional indicator is weaker than what it was because of the pullback. We have the 8-10, but we have that 8-day moving average Hilo channel effect is weakening. We also have a 20-day moving average versus price that is weakened a little bit now. When I say weakened, it's because we made a top 1, 2, 3, 4, 5 days ago, and we're holding that support line. The 20, so you got a 50-day MACD oscillator at its strongest, but the Bollinger bands are kind of failing a little bit because of the pullback and whatnot. So when we're looking at a 40-day commodity channel index is a little weaker, and so is the 50-day moving average versus price. But that's because we have the pullback to the support levels, and that's how they're going to read. But here's a good thing. That 100-day MACD oscillator is at its strongest, and the 50-day average volume, which is 10,515,000 shares, is a buy. And like I said, the 60-day commodity channel index is weaker, and so is the 100-day moving average versus price. But the good news is the 100-day MACD oscillator is at its strongest. So when you do get pullbacks to the support levels, this index has been on fire, and it's been really good. And with a lot of uncertainty around the world, gold had made 6-year highs, and it has been on a tear. So when we get pullbacks, and as long as that scenario stays the same with economic pressures or the word recession and whatnot, that's when they come in and they start buying it up, central bankers around the world. So we're definitely going to keep watching exactly where the pullback support, if it breaks it and whatnot. They do have options that you can trade. That's what we trade when we're in these gold stocks. We've been participating in these since June and whatnot when they were down there at the bottom. And I will cover another one called RGLD, Royal Gold. But once again, as long as that recession is around, as long as world leaders are having a problem, as long as all of these uncertainties are here, gold is on fire, and it would continue to go higher. You know, one thing about these ETFs and these charts, they like to break out, they make their highs, they come back down. You can see over here that on 8/13, we were at a high of 39, and yeah, we pulled back in a consolidation, but we dipped down to 35.04 on 8/19. And from that period, we came back in, had that 5-day consolidation, we broke out, came back, hit that support level, and we went up, and we made the high. So now we're going to look exactly what I just talked about, and I will be updating these indicators that we use in our proprietary platform and how they come up with the scores. Right now, all eyes are going to be on the pullback like I'm showing in here. Sign up for the free 5-day trial. 702-685-0772.